Start my video so you can see me. This is Lisa Hudson. I am the director of the East Colorado Small Business Development Center. And first off, I just want to welcome you to the Northeast Colorado Critical Resource Updates for Business Owner call. We're doing this on a weekly basis every Friday at 3. I know, Friday at 3, really, but we're here. So we're glad that you could join us. We want to thank our partners at OEdit as well as Startup Colorado for helping us put this call together, as well as all the resources that will be on the call, which I'll introduce shortly. Let's go ahead and go to that first slide. Here's some more partners that we have that have partnered with us on this call. We have, like I said, Startup Colorado, the OEdit office, the Department of Local Affairs, the Department of Labor and Employment. We have Galala Commons, Grow Seco, the Civic Canopy, the Telluride Foundation, the East Colorado Small Business Development Center, and the Northwest Colorado Small Business Development Center. Let's go ahead and go to that next slide. I do want to point out that if you have any questions, feel free to type in the Q&A box, and we will try to answer those with a response via live text, or at the end, we will have a time where we open it for Q&A to all of the panelists. So again, I'm Lisa Hudson, Director of the East Colorado Small Business Development Center. This is our agenda for today. First up, we're going to go over the PPP, understanding the Paycheck Protection Program. We're going to have Mike O'Donnell from Colorado Lending Source up first, and then we'll have Bob Martin available from the Small Business Administration to provide any updates after that. Next, we'll have a short presentation about cash flow planning. We'll have that Q&A, and then we'll have a wrap up. Go ahead and go to the next slide. So understanding the Paycheck Protection Program, first up, I'm going to introduce Mike O'Donnell from Colorado Lending Source. And Mike is just such a wonderful resource for us here at the SBDC. He is a fiercely passionate about the state of small business within our communities. Mike's entrepreneurial spirit has been in the SBA lending world since the mid-90s. Under his leadership, CLS, Colorado Lending Source, has transformed from an average SBA lender to an incredibly diverse, mission-focused economic development organization with a team of people intent on helping small businesses start up and grow up. His personal mission is to make people smile because inadvertently, grumpy people aren't very much fun to be around or work with. So we'll go ahead and go to this next slide. And Mike, I'm gonna let you take it away from here.
Okay. Thank you very much, Lisa. I appreciate the opportunity, and I hope you can see me okay. Can you, or you're fine? Can you hear me okay? No? Okay, good. Thank you. I didn't get a chance to dial in, so you're going to go through my computer mic if that's okay. And I'm sitting here, I found out on Zoom, you can actually put whatever background you like behind yourself. So this is my view of 18th Street in downtown Denver just the other night. So there's actually no one downtown here, and we won't go down that road. But I'm going to be talking to you a little bit about the Paycheck Protection Program, which is by far and away the best program ever for a small business to access. And I can spend as much time or as little time on this. So I'm going to be looking for guidance from you, Lisa, and anyone else. It's a program that, and I've just got a couple of quick slides here. It's the only program that where you actually, as the borrower, tell the lender how much you can borrow. With the disaster loans, with typically bank loans or loans from nonprofits, oftentimes the lender is actually telling you how much you can get based on collateral and history and stuff like that. This loan is very simple in the sense that what you'll do is you'll work out what your average payroll cost has been over the last 12 months or through calendar year 2019, or if you're a relatively new business, it's the first 2 months of this year, you've got a couple of different areas to look at. And then you work out what your average monthly is, and you multiply that by 2.5, and that shows you how much you are eligible to borrow under the Paycheck Protection Program. The maximum is 10 million, so you can be a fairly large business to access this program. The program is open to nonprofits, including churches, which again is a first for the SBA. So anyone who's a 501c3 is eligible to apply for a paycheck protection loan. I call them, I'm not good at alliteration, so I call them the PP loans, and not the PPP loans, the PP loans. So essentially, they're just good loans to get. The interest rate is set at 1%. There are no fees associated with this loan. There's no personal guarantee. There's no requirement for collateral. There's no collateral that can be attached. It's a 2-year term 24 months. There are no payments of the principal and interest for the first 6 months. So essentially, you've got that amazing window to actually access these funds. And the intent of the program is to really encourage businesses to get these funds to either bring people back or to keep people employed and really prepare their business for the recovery that should be coming, by the time we get to the start of the third quarter. So the different ways you can actually calculate what you're eligible for, and I think on my next slide I'll talk about what you can actually include. But again, you've got two different periods if you've been in business for over a year, and you've got one period to use if you've been in business you didn't start your business until partway through 2019 or early this year. And then if you're a seasonal employer, there's another way to actually calculate your payroll. But again, this is the basis of the program. You work that out, and so the emphasis is on you understanding that, and then you present that to the lender, which in most cases will be a bank, although no nonprofits will be able to start doing more of these loans hopefully in the future. And again, these are just programs that are accessible. And then if I say the next slide, something might happen and the next slide might advance. And these are the sorts of things that are actually possible to include in your calculation of payroll. And to be honest, over the last 2 or 3 weeks, I've been doing nothing else but talking about this program. And I've read the Act back and forth a few times. The Act is very specific in black and white. We have a few, enhancements to the program, if I use the word carefully, that Bob can talk about, that have just changed it a little bit. But the Act itself is very, very straightforward in the sense that it wants to make it relatively easy for anyone to apply for these loans to help bring people back to work or keep them employed. So in terms of looking at how do you calculate the average payroll cost number, if you're an employer, it's all these sorts of things. It's the salaried wages, commissions, or something that you pay your people, your employees. It's cash tips or equivalent. It's payments that you've made for vacation, parental leave, family leave, medical leave, sick leave, all the sorts of things you spend money on as an employer. It's money that you might have paid for someone, when they left or separated, because sometimes when people work for like 30 years somewhere, they might get an extra couple of dollars at the end or a silver watch or something. And it's the same with bonuses. You can count bonuses you pay people. Any money that you pay to help provide insurance premiums for your employees to access group health, any money that you contribute on the employee's behalf to retirement funds, and then any monies that you pay for the state or local governments related to the compensation of employees. And so that could be in Colorado unemployment tax that you pay locally. It could be if you're lucky enough to work in the city of Denver, for example, you pay an occupational privilege tax, which is how you show how excited you are to be in Denver. You pay them an extra $10 per employee every quarter or something like that. So all of those are fair game to be included in your total payroll number. And then if I say the next slide again on the next slide, if you're an independent contractor or a sole proprietor, the way you calculate your payroll, in quotations, it's the sum of payments of any compensation, including wages, commissions, incomes, net earnings from self-employment, 1099s that you get in an amount that doesn't exceed $100,000 in a year. And that's really, prorated for the covered period. And whether you're an employer or a self-employed as an independent contractor or a sole proprietor, that $100,000 number is a cap. So you can't have an employee included in your payroll, at least the portion that they might earn above 100,000, you have to ramp them down to 100,000. You can't include it in your calculation of payroll, federal taxes under chapters 21, 22, 24, and additionally 26, which is FICA. The SBA added that one. So essentially, if you pay federal income taxes or federal input, they can't count those. It's only the state things. And then the Act says very specifically that you can't include in your payroll numbers any money that you might pay to an employee whose principal place of residence is outside the United States. It does not say you have to be a citizen or a legal permanent residence. There is some draft legislation around CARES Act version 2.0, which is floating around in Washington, almost got approved yesterday, and that would actually restrict this a little bit more. So you'd have to be a legal permanent resident or a citizen. But at the present time, the regs don't say anything like that. So when we talk about the Paycheck Protection Program, this is how you determine how to apply for or what you apply for. And then there's a loan forgiveness section under the CARES Act that says that the 8 weeks after you receive your funding under the Paycheck Protection Program, any funds you spend on payroll or any funds you spend on rent, utilities, or interest on existing loans that you might have can be forgiven. And so that's a huge opportunity under this program. And to just re-emphasize, you're borrowing 2.5 times your monthly payroll to get the Paycheck Protection Loan. And then you've got 2 months, 8 weeks. Anything you spend during those 8 weeks related to payroll or those other 3 things I mentioned, utilities, rent, or interest on loans that you've got, can be basically forgiven under the program. So you get a 24-month loan, it's 1%, no payments for the first 6 months. You get your funding from the lender, the bank. You've got 8 weeks to sort of start the clock, and any money you spend during that 8 weeks on those categories, as long as 75% of it is on payroll, can be forgiven. So, this might be a loan that you get today that you get forgiven in 10, 12, 16 weeks. And then before the 6 months are up, your whole loan has gone away. So you've got nothing to pay for the remainder of the loan. So from the perspective of this, the single most important thing that has ever come out of any legislation to really help small businesses get through a very, very difficult time, which is not localized or a specific area, it is the whole country. So these are the sorts of things that we can do under the program, and I wanted to make sure that you're aware of that. Bob can probably give you some ideas. I know the SBA announced yesterday that there's been more than 500,000 of these loans already approved. The lenders that we are working with, and we are helping a few of the lenders process these loans. A lot of the funds have already been set aside. The lenders, if they haven't got the funds out to the businesses yet, are in the process of doing that. And so all of this is happening very rapidly and very quickly. So the Paycheck Protection Loan is something you should explore and apply for, even if you're an independent contractor or you have a gig driving an Uber or a Lyft, in the evenings or on the weekends. All of those sorts of businesses are eligible under this program. And with that, I'll pass it back to my very esteemed moderator, who's probably told me I've spoken for too long. So let me check. There we go.
Thank you so much, Mike. I really appreciate you presenting on this and such a great perspective on the program. Next up, I'd like to introduce Bob Martin. He is with the SBA. He is a lender relations specialist for Colorado District Office. He has spent 12 years in this position at the Colorado District Office and 2 years with the New Mexico District Office. Before that, he was an SBA banker for Wells Fargo in Denver, and he holds a business administration degree from New Mexico State University. He has more than 30 years of experience with SBA financing programs ranging from access to capital to providing counseling services to lenders and their borrowers. Bob, I'd like to turn it over to you to talk about any other updates that you'd like to share that maybe Mike hadn't touched on already. Bob, I can't hear you. Maybe we'll see if we can get you unmuted. Okay, it looks like he's connecting to audio. So while he's doing that, I just want to make a comment on the slide that you can see right now. This is a comparison of the Paycheck Protection Program against the Economic Injury Disaster Loan, also known as Int'l. So the use for these programs, the PPP is for payroll and approved operating expenses, where the Int'l is for working capital. Collateral, no collateral is required for the PPP, and no collateral is required for loans under $25,000 in the Int'l. SBA will take the best lien available, excluding real estate, on loans over $25,000, but you will not be denied just based on the lack of collateral. Forgiveness for the PPP is up to 100% with approval, 8 weeks payroll expenses plus 25% operating expenses. So again, 75% of that needs to be used for payroll expenses. And forgiveness for the Int'l is up to $10,000 emergency advance for payroll and expenses. So when you're filling out this application, you'll come across a portion that has a checkbox, and that is for what they're calling the Int'l advance, and it's the up to $10,000 advance grant portion. The amount for the PPP is 2.5 times the average monthly payroll for the prior 12 months for monthly expenses. And for the EIDL, it's up to 6 months of operating expenses, not to exceed $2 million. The terms on the PPP is 1% of unforgiven portion, 2-year fixed rate. And the terms for the EIDL are 3.75 for small businesses and a point less for nonprofits. And it's up to a 30-year fixed rate.
Lisa, I'm here.
Okay, all right.
I'm
Bob,
sorry
let's go ahead
about
and have
that.
you jump in. No problem.
It's always on government phone. I don't know if that means anything. It's probably the operator, I'm sure, but it's always good to follow Mike. Mike has been around a long time and knows the programs. There's not much I wanted to add to Mike's PPP presentation. I just wanted to say one thing for sure. It's very fluid and things are changing on an hourly basis. So I just keep on telling my borrowers and lenders to keep looking at our website because it is a fluid operation. Other than that, the PPP loan is done through lenders. So I highly suggest, and Mike probably would too, is start with the bank that you're banking at first to see if they're doing the program. And if not, you start looking around or asking your peers on who they've used to possibly get a PPP loan. Other than that, there's not much more. I'll hang around for questions. And again, I apologize for that earlier.
No problem. We are glad to have you on the call. And as I have looked through our Q&A, we're getting several questions. And please keep those questions coming, and we're trying to answer them via text as soon as possible, but we will also have a portion towards the end where we can answer those questions. So from here, what I'd like to do is just review some resources and updates for the agricultural producers. Last week we had mentioned that we were going to have a bigger focus on this for this week, but we just don't have a lot of updates here. I do want to say that the PPP can be utilized for ag producers, crop and livestock, so they can apply for that PPP. And then for the FSA COVID-19 resources, information on the USDA service centers and continued support of farmers and ranchers is available on the FSA's website. The USDA has some guidelines for distribution of funding to ag producers, and it's still pending from Secretary Perdue and the USDA, so we're still waiting on that. And then the Colorado Department of Ag, you are always welcome to submit questions, comments, or concerns via their form on their COVID resource page, which is linked on the slide here. Or you're welcome to email directly at cda_info@state.co.us. All right, we'll go ahead and do the next slide. Okay, up next, I'm going to be introducing Phil Votiro from High Plains Advisors. Phil is a former senior VP in finance for OFI and has 30+ years of financial service industry experience. His keen ability to assess an organization's financial structure, challenge the status quo, and construct actionable solutions with significant and impactful results is the reason why he's on our call today. So I'm going to go ahead and hand it over to Phil. Take it away.
Thank you very much, Lisa, and good afternoon, everybody. I hope this webinar finds all you and your family well, and I know that that's first and foremost in our hearts and prayers, that everybody stays and continues to be well. We're at a critical crossroads in this country. We talked a little bit about it earlier on another call. We've had such an absolute focus on the medical and the health side, appropriately so. We know that the energy and the effort that we need to put in on reopening the economy needs to be as great. As we've seen on the medical side, there are many bends in the road, there are many challenges, and timelines are fluid. What we're here today to really look at is what we can do to make sure that as those bends in the road start, that we're able to keep you and your businesses functioning. Early on, you heard from Mike and Bob about what is the most incredible program the government has ever launched in terms of its size, scope, and desired outcome. It is the starting point, it is the building block, the first part of the bridge to getting your business into the next part of this calendar year. For myself, just a bit of background, I spent, as you heard, the last 30 years in financial services. And to my resume, I don't put out, but in 1987, the markets crashed and there was much heartache. In 1998, I happened to be in Russia when the emerging markets melted down. The company I was operating at the time, we worked with less than 3 months of cash flow for over a year. 2001, Oppenheimer Funds was in the towers when they went down. We went through incredibly difficult times. In 2008, like the rest, we suffered through the Great Recession. That's not to put resume items on my resume, but rather to say that through each of those, and for each of you who may not have been through situations like that, a better day is coming. And for us to get to that better day, we want to make sure we put all the right tools in place for you. Those financings coming out from the CARES Act is a really valuable and incredible start. Just flip the slide. So cash flow is in everybody's business. It is the lifeblood, but it's often something we don't think a lot about, right? You open your doors, beginning of the month, cash in your account. Business flows as it always has. People are taking care of things on the service side. People are taking care of things on the payment side. You close your doors on the last day of the month and, you know, hopefully in most cases, cash is still there and it's kind of just a natural cycle. It's kind of taking care of itself. And then 6 weeks ago, everything changed. And now it doesn't. Flip the slide, please. So for you as a business owner, somebody who's spent, you know, their entire focus on developing a business idea, bringing it to market, hopefully succeeding in it, you're always thinking about that next opportunity, the next ability for you to build your business out. Those days are being put on hold. Today, we have to laser focus on the here and now. And business models that even 6 weeks ago were in vogue, made sense, were profitable, got you excited, those things are on the sideline right now. What we're focusing on right now is the survival of your business. So for those that don't have those concerns, you know, listen along. We'll talk about some of the things that you might be able to do. But for the vast majority of businesses, turning off revenue streams creates a critical impediment to continuing. So what we're going to talk about here is really focusing on how to get you to that next bridge. First and foremost, this is a line that my son, my youngest, shares with me all the time. Dad, control what you can control. Don't worry about me all the time, just control what you can control. Well, in this environment, I don't think there's a better statement for each of you to be thinking about. Control what is within your direct ability to control. That's not your customers, by the way. The next 6 months and next year may be very different from the way that your customers choose to interact with you, purchase services from you, decide whether or not they even want to do business with you. So as we're thinking about how to prepare, we say control what you can control and focus that for the next 6 months, things are going to be anything but normal. Controlling what you control starts with what sits in your bank account. What sits in that bank account, that checking account, is what you have access to immediately today. It's not contingent upon somebody approving a loan. Even like with the SBA, with all the best intents and purposes, they still have to process these. There is time lag. Some people don't have that benefit. So as you think about it, think out 6 months and think about the way in which you need to manage your money today. Cash in hand. You need to think about what it is from a temperature standpoint you are going to be looking at over the next few months. So first rule, count everything that you're doing right now, meaning what are you spending your money on and on what? Get a very good sense for what you're spending on a monthly basis. Payroll, rent, utilities, any cost that today you are paying, those are the things you need to be focused on, because that is what we refer to as your burn rate, the amount of cash that you need to expend every month to stay in place. Right now, we're not adding any dollars to it. We're not thinking about the revenue side. If you've got that, this is obviously something that's going to mitigate some of what you're having in terms of challenges. But today, you're focused on the two things you have, cash and your absolute need to spend that cash. To get the right temperature reading, we do a very simple calculation, okay? We take the cash on hand and we divide it by that average monthly burn. And what that's going to tell you is the number of months you have to figure this all out. I put out there 6 months, maybe it's less, but maybe it's more. And you need to know at every given point in time how much runway you have to make decisions, to make choices, to seek alternative answers. Once you have an understanding about how long the runway looks right now, we want you to extend it. We call it slowing the burn, okay? First thing you do is you eliminate the word can't from your vocabulary. People have run their businesses for a long time and said, I can't do that otherwise. Today, what you can't do may be the last thing you will do. Everything is on the table. Everything needs to be evaluated. Focus on those expenses that are essential for you to open the door every day when you have that chance to open it. Don't think about the other things that were nice to have, those other things that made you what your business was even a mere 6 weeks ago. What you're looking at right now is the most efficient way to deliver the service or product that you are offering in the most efficient way and the least expensive way for you to actually provide those services. Should you flip the slide, please? Thank you. So I want to leave you with a couple of considerations here, because as you're going through it, it's going to be very helpful for you to take a second, pause, react, and think again. What is it that I can control? First, for those of you who have been in business a while, okay, especially those that have been very successful, know that successful businesses have a real tendency to build comforts in. So that means that the more successful you are as a business, the more opportunity there is right now to slow that burn down, to take out things that are not creating incremental value for your organization. Change the business paradigm that you have long since been taught. Everybody who's either taken a business course, gotten an MBA, or been schooled in how to run a business is taught around a dollar needs to be evaluated in terms of what it will return to you. What is my return on investment? Well, today I offer you that calculation, that algorithm really gets put to the sideline, because a key element of a return on investment is time to get that return. And one thing right now many businesses don't have is time. So when we focus on the dollars, we focus on how to conserve. We want to evaluate every opportunity, every decision to make a dollar of investment, not with adjectives. Throw your thesauruses out for the moment. Everything needs to be grounded in numbers and probability of outcome. Throw out your accounting books that say there's a fixed and variable cost. Yes, that's a concept, and yes, it has good value. But in this environment, every expense is variable. Every expense, rents, long-term contracts, anything, any commitment that you have is subject to being looked at, renegotiated, deferred, and or forgiven. These are ways that, again, you slow the burn. Keep in mind, technology is often the answer to every question, We all get excited about the latest technology and what we're doing to invest in it, but it's not pixie dust. And as such, you want to make and take a critical look to make sure the technology that you have in place is actually drawing a direct line to the revenues and the business that you're trying to deliver. If it doesn't, reduce. Think about other ways to create cash, okay? You have other assets perhaps on your balance sheet, receivables that can be factored, inventory that might be able to be wholesaled, other contracts, IP, something of other that you can create and convert to cash. Again, in the next 6 months, it's about building that bridge and extending the runway. Explore alternatives, private lending options. Some of these are to be avoided. I agree with you on that, but there are others that will provide a viable way for you to continue to extend that bridge beyond the stimulus dollars. Focus on your best products and services, throw everything else out. For the moment right now, you need to be connecting with your customers in the most efficient way and in the way that's most meaningful to the way that you're running your business. Think about your competitors as partners. I know it's difficult. You often look down the street and say, I can do better than that person, because today that person, that business may be your greatest ally. You know how to do the business that you're in. You have common vendors. You have common needs. There may be opportunities to merge a business. There may be other opportunities to simply partner and increase your buying capabilities or create profit sharing. You may be on one section of town. They may be on another. Take the opportunity to think creatively there. And then finally, again, breathe, adjust, and control what you can control, because you're going to need to make changes along the way, and you need to have your head clear. Just flip the slide one more time. So you heard a lot about the programs up front. We've talked a little bit about how to run your business and hopefully give you the opportunity to build that bridge. We actually started an organization not a scant week ago when three of us, myself, Lou Vischer from Lou's List, and Seth Levine from Foundry Group, got together and said, you know, we have a vision here. We see a lot of really brave, a lot of people that are putting themselves on the front line so that people can survive. Now that's on the medical side. That's what people, whether they're in the grocery stores or civil servants or our brave medical professionals. But we said, we have finance skills. What can we do? So we brought this idea together a scant week ago. We've put it together now. It's called the COVID-19 Finance Assistant Network. It's now staffed with over 60 senior finance professionals, and we have connected with area experts in banking, legal, tax, and accounting to actually reach out to the community and offer our services on a pro bono basis, such that any questions that you have, whether it be in how do I manage my cash flows to how do I navigate the CARES Act, that we're there to assist you. I know that in the last presentation, we didn't put out the website. We will put that out later in this one, but please feel free to access that. You'll come to a page where you can just put in a little script about what your situation is. And our commitment is to return an answer to you and get you with one of our advisors between 24 and 48 hours after you send it, because we do realize that speed is of the essence. Thanks very much.
Thank you so much, Phil. We're going to go ahead and go to this next slide here. We are now going to start our Q&A session for the program today, and I'm going to go through the ones that have been asked in the Q&A box first, and then feel free to add more as more questions may come up. First, we're going to start with questions regarding the Paycheck Protection Program. So the first question that we have here is, how do we coordinate the unemployment work share program with the PPP? Can we start work share while we are awaiting approval of PPP, then go to full payroll, and then go back on to work share?
Mike, do you
going to
want to
put
take
this
that
out.
one?
No, that sounds like
Yeah.
a good one for you, Bob. Thank you. I know it's Title I of the CARES Act. I haven't really studied the unemployment, so I'll let you be the expert there.
Yeah, and Lisa, honestly, I'm not up to date on that on unemployment side on that either, but we could definitely get them an answer.
Yeah. And really the
Or
main
point in
thing,
the right direction.
yeah, re-emphasizing the Paycheck Protection Program, again, it's to get people back and fully employed, and you can use that
Right.
forgivable loan to do that. So hopefully you can get them off unemployment or whatever it is that they're on, or at least get them re-employed. So yeah, you can't use them both, but you can certainly use the Paycheck Protection Program. You've got 8 weeks, so maximize that while you can.
Correct.
Great, thank you. Next question. Please address P for startups who hired contractors and didn't take an owner draw instead of hiring W-2 employees.
That's really one of the gaps in the CARES Act, at least this current iteration. So again, independent contractors, the contractors that they hired, whether that's a 1099 or some other way of remuneration, they themselves can apply for access to the program under the PPP program. If you haven't paid yourself or you've put all your money back into the business and you can't document any source of revenue to yourself as an employee, you can't really apply for the program. But if you're moving at least some income through onto a Schedule C or something like that, you could probably then claim it as an independent contractor or self-employed individual. But you know, 1099 people, independent contractors, you cannot include in the calculation of payroll for your business. They have to apply under their own tax ID number. And that's really the best way to treat them, because they might work with multiple organizations as an independent contractor, in which case they will assemble all of those payments that they get. And as long as they don't exceed $100,000, then they can use that evidence to apply for their own PP loan.
Great, thank you. And the P has opened up into the independent contractors and self-employed as of today.
Yes.
All right, let's go
Correct.
on to that next question. If you had fewer employees as of February 15th than in 2019, can you base it off of your payroll that was on February 15th, or just exclude the 2019 cost for those employees who had already left by February 15th? We don't want business owners to be penalized by being pegged to 2019 if their business staffing has changed prior to COVID.
You've got the choice with the Paycheck Protection Loan Program to actually use a couple of different periods to calculate your payroll cost. And one of those periods, as defined by the Act and actually allowed by SBA, is to go from March of last year through the end of February this year. And that then takes that average payroll number. But if you've got fewer people in February of this year than you had last year, then you can borrow less funds. But you might also be able to maximize your forgiveness. So you've got two choices in terms of the process. So interesting question, though.
Very good. And Mike, this next one is directed to you. Which banks are actively accepting or processing PP applications? Some businesses in our community have contacted several and have been told either they cannot accept any more applications or the bank does not know how to process these applications.
And the SBA has a link which actually is like a map of everyone in the United States that can do these. But you're right, every bank's a little bit different in terms of whether their capacity. I did understand from a conversation with First Bank today that they've already got 16,000 applications and there's only so many people to process them. So some banks are indeed running out of personnel because it takes a little bit of time to process each loan. Not a lot, but a little bit of time. But you could just think of that. If you got 16,000 requests from customers for a product you're selling online, how quickly you could process them. So the state of Colorado Edit and the small business development centers are actually sharing lists of people looking for non-current customers who might be able to process the loans. You know, off the top of my head, I know of half a dozen in Colorado who say they're open to requests. You know, Vectra Bank, US Bank, First Southwest in Durango is looking for clients anywhere in the state of Colorado. TCF, Citywide. But again, it's just that there's a bunch of projects that have been submitted, and with more coming in today from the independent contractors, it's just going to be, you'll just have to be a little bit patient because not everyone is going to accept a request today, and you might just have to be in the queue. So it's going to sort of change, but that SBA link, which I'm sure you probably have, Lisa, that you've shared, which is just a map of, you type in your zip code and it'll tell you who are the lenders close by who are eligible to do the loans. And then you'll have to check with them to see if they're able to do the loans.
Very good. And I will say SBDC has started collecting a list of banks that are accepting new customers specifically for this program. So you can reach out to your local SBDC consultant. If you're within the East Coast territory, it's the first name of your consultant at eastcoloradosbdc.com. And we're happy to help you navigate that. Also wanted to let you know that most lenders that I've spoken to, as long as you've had some sort of an account with them, they will consider your application, whether it's personal or business. They are seeking to gain you as a business customer thereafter. But if you have a personal account, reach out to any lender that you have any kind of banking relationship with. That would be my recommendation. All right, moving on to the next question. On the PPP, is payroll part limited to 8 weeks? And is the rest used for operating expenses? And I responded with yes, the payroll is for an 8-week period. And a follow-on question to that was, so it is limited to 8 weeks and then the rest must be used for operating expenses? Question mark.
No, that's not it. I'll try, but I'll let you jump in, Bob, too. But, you know, you can borrow the funds. It's based on what your payroll was, or at least the average. You can spend the funds on anything related to payroll or those 3 other things, utilities, rent, or interest. And you don't have to spend it in 8 weeks. You could spend it over the next, couple of months. It's up to you. You've got the funds to do that. But anything you spend in the next 8 weeks could be forgiven. Doesn't have to be. I mean, because 1% money is still relatively attractive. So if you can't spend it all on payroll or don't want to spend it all on payroll, you can spend it on those other 3 categories that defines what you can spend the funds on. But you don't have to apply for forgiveness. But if you can, why wouldn't you? So I'm not sure I exactly understand the question or if I've answered it well, but I'll defer to Bob on trying to fill in because I may not always understand things.
I think that you did answer that question. Okay. Bob, if you have anything else, just chime in.
I might have scared Bob away. I hope not. Nope. Okay.
Okay, I'm going to move on to the questions regarding Int'l. Can you address Int'l grant or loan for startups who have hired contractors instead of employees?
This would be a better Bob question. The Int'l loans, the disaster loans, I call them, are a little different, obviously, than Paycheck Protection. They really have a little bit more history in the sense that the loans under the disaster loans, at least my understanding is that originally the business had to be in existence for at least a year before they could apply for a disaster loan. The CARES Act modified that to say that if you are looking for a funding of less than 200,000, you could be less than a year old to apply for a disaster loan. The loans are also credit scored, and essentially they're based on no credit elsewhere, the typical SBA requirements. It's worth applying for the loan because even if the loan isn't approved, you could access the grant component. The grant component is, according to the Act, $10,000. You don't have to pay it back if the loan's not approved. If you do also get a Paycheck Protection loan and you apply for forgiveness and you use that grant to help with payroll, that will actually erode a little bit of the forgiveness you get under that other program. So the programs are sort of working interchangeably, a little clunkily. But a Paycheck Protection loan, if you're a startup or a brand new business, I think you'll find it hard to get either of those loans. And I think that would be the challenge, but there may be some other resources. I mean, we operate the Kiva loan program here in Colorado, and that's 0% financing for a couple of years, and we've already put almost half a dozen businesses through that program. So there are other resources out there for you to complement what the SBA offers as well too. But again, I think I answered the question, but let me know if I didn't. Oh, you want to use it for contractors? Yeah, potentially you could do that under the stimulus, under the disaster loan, but you couldn't do that under the Paycheck Protection loan. Sorry.
Very good, thank you. One other question on the Int'l portion. This person received an SBA talking points PDF today regarding Int'l that effectively says that the grant is now $1,000 per employee. and wants clarification on if that is W-2 or 1099.
Really have to defer to Don on on that. That Inc. magazine article came out yesterday that said that it's $1,000 per employee, and if you're a sole proprietor, that would logically mean you couldn't get anything. The Act, the CARES Act, very, very specifically says that the $10,000 is a grant. The $10,000 is not attached to how many employees you've got. I have not seen any verification that the SBA has decided to reinvent the CARES Act to make it fit that particular requirement. But if that's what they're saying, then we're pretty much stuck with that. But I wouldn't have an answer to that, and I would be happy to contend that somewhere if we need to contend that somewhere, because the Act is very black and white. It's $10,000. There's no restrictions on tying it to employees. That's just a local rule that they might be trying to railroad through themselves. So we'll see what happens there.
All right, thank you for that question, Jeff. So we don't have quite a clear-cut answer for you yet. We will try to find that information and be able to present that on the next call. We do have a question about the disaster loan. It says, I applied online for the disaster loan and the $10,000 grant and have a confirmation code and have not heard anything else. What is going on with that? And I think I'll answer this one. The EIDL loan and the EIDL advance, which is the grant portion, I mean, it's getting applied for all across the country. And so they are trying to get through these applications as quickly as they can. But with the system that they have in place, you complete the application, you're given a number at the end, but there's no follow-up email afterwards until your application is getting processed. And then at that point, you'll get another email requesting more documentation. And so until you receive that next email, you are still in the queue to have your application reviewed. Someone else had asked a question, and I answered in the chat that they had heard something about 3 days. The 3 days only gets activated once your application has been processed and therein really approved. And then 3 days from then, you should receive the funds. So we still have a lot of people in the queue to have those completed. I did ask a question across the state today if anyone had received funds through EIDL, and there are some people in Mesa County who have been approved and are working through that process now to receive those funds. But most of the money that we've seen come to small businesses as of right now is through the Paycheck Protection Program. Anything you'd like to add to that, Mike?
No, I'm glad that you've actually met someone who's actually been getting the funds. I've been working with some of our clients who've been waiting now for a couple of weeks, and they've been told by the SBA folks they've spoken with that it could be as long as 3 weeks to get the grant. So if it's quicker than that, that's amazing. That's great.
All right. A question about self-employed. This person is self-employed sole proprietor. Which program is best for me? Should I wait for the unemployment to open for a sole proprietor? These forgivable loans do not seem to apply to a very small business like me. One thing that I'll add, and then Mike, I'm going to let you come on to this question, is whatever you apply for, it's up to you on what you accept once you're approved for it. So if you applied for funds and they approve you for funds, you have the choice on whether you want to accept them or not. So from my experience, it seems to be advantageous to get in the queue.
Yes, and I concur you should get in the queue. But even as a sole proprietor, I mean, your payroll for the definition that the SBA is using is based on your gross income over the last 12 months, not your net income, your gross income. So if you've been doing pretty well, I mean, that's the basis for you coming up with your 2.5 number. You know, take that, whatever that is, divided by 12, multiplied by 2.5. So again, my focus is really on trying to get people to not be on unemployment, but I don't know exactly how unemployment is working under the Act. So you're definitely eligible for the Paycheck Protection Program, and it is much quicker than the disaster loan program. So I'd always start there and then, you know, apply for the disaster loan once you've finished up. The Paycheck Protection Program is only good through the end of June, unlikely to be extended. The disaster loan program will probably exist well into 2021. So I would do it in phases and also explore other opportunities in your community, because some communities have small grants, some of them have low or no interest rate loans. There's lots of different options to explore.
Thank you. We do have a question on here about the work share, and I reached out to the panelists during earlier presentations, and it doesn't seem like we have someone that can answer that question. So we're going to try to find the answer and get back to, looks like Megan had asked this question, if an employer has reduced wages 25%, can the employee use the wage share program to help offset the 25% reduction? And without having much knowledge on the work share program, we're going to bypass this question for now. Hopefully we'll have an answer later on. There's another question. For the Int'l, can you define what small agricultural co-op consists of?
Oh, me? Small agricultural co-op consists of. The SBA has size standards to determine how small or how big a company is, and for and I can look them up fairly quickly, but usually a good rule of thumb is if you have less than 500 employees, you would be considered small. And then for many of the I'll look that up while we're talking here. For many of the entities that you know, gross revenues is another indication of how big someone is. So the SBA has a series of what they call size standards, which are based on NAICS codes. And I can very quickly look up what that is. So if we want to get on to the next question, I'll be back for that in a second.
Great, thank you. We do have a question about the PPP. It says, if you apply for the PPP, can you apply for the disaster relief loan? And the answer to this is yes. You are able to apply for PPP, Int'l, and Int'l Advance, that grant portion. You can apply for all three. You just cannot use the funds for the same expense. That's when they'll consider it to be double dipping, and then that portion will not be considered forgivable. I'm going to go on to the next question. If a company has applied for PPP and is continuing to pay their employees a base salary, but bonuses are now being impacted because of a drop in sales and engagements, can those employees still apply for unemployment as well? This is kind of a mixed question because it's talking about the unemployment portion as well as the PPP. Mike, do you know about bonuses if that's impacted by the unemployment? I don't know the answer to that one.
And I'm not, again, from a PPP perspective, again, if you are bringing people back, I mean, and I've had this discussion with a number of people, again, they want to make extra payments to them to compensate for the funds they weren't able to pay them like last month, and they can do that, or pay bonuses to their employees when they bring them back so that they can include them in the 8-week period to maximize forgiveness. All of that is possible. But no, I'm not really very good at the interchange between unemployment and how that might work with an SBA product.
All right, thank you. All right, I'm going to go to another question here. My 2019 average revenue was 80% due to a staff of 4 independent contractors. I contracted 2 additional artists during November through January. I submitted an application already, but the average was much lower than the actual payroll I have currently due to the increase in staff. Does the loan request have to be based solely on the average of previous year, or can it be based on the first month of 2020? My understanding is that it's the average of the last year from March to March.
Yes, or
is that
January,
correct, Mike?
Either January to December or March of last year to February of this year. And again, independent contractors, 1099s aren't employees, and you can't really treat them as employees from a tax perspective. So they can apply on their own right for the PP program, and they should. So you don't need to worry about them. They should be able to look after themselves. But you're right, if you don't have much in the way of employment or payroll, because you mostly use independent contractors, 1099 people, then it's hard for you to get many funds from a program. But I've heard of, a farmer that got a $5,000 loan under the Paycheck protection program because he doesn't earn very much through his farm, but and then he got a grant under the disaster loan program. And so all of those things can help. So something is a little bit better than nothing. But please, the 1099 people, independent contractors, they're not employees. They're people who have their own businesses, and they can apply for the program themselves under their own tax number or ID number or social security number, and they should. And
very good. Yeah, and I will just echo Mike there.
Yeah, sorry, it's fine.
I'll just echo Mike there that your contractors they're really considered their own business. And so if you did increase your staff or your W-2 employees, then they would be considered. But any increase in contractors that you have hired to your company, then they would not be considered, and they should apply on their own starting today.
Yeah. And I'll just add back to the question on size standards. NAICS codes for agricultural type businesses would identify what the maximum size standards is. But typically it looks like for most types of farming or cooperatives, it would be that $1 million. So it may or may not help for some people. If you're involved in forest nurseries, it's $12 million. If you're involved with fishing, which there's not a lot of around here, it's 22 million. So there's slightly different thresholds for different sorts of NAICS codes in the agriculture industry, but by far the most common one is about $1 million, if that helps you. Sorry about that. I'll be quiet.
Very good. Thank you for looking that up. Okay, here's a question. I'm unable to apply for PPP loan at my bank, Wells Fargo and Citywide. Where can I apply? Ron is the one who asked this question, and we are collecting a list of lenders who are accepting new customers to the bank. So you can connect with your local SBDC consultant to get that list. That way we can help you navigate where to find a participating lender that is looking for new customers. You can find a consultant at their first name at eastcoloradosbdc.com, or if you're not currently working with an SBDC consultant, you can go to eastcoloradosbdc.com and request an initial appointment. If you're not in the area, you can just go to coloradosbdc.org and find the closest SBDC to you. We're all working virtually, so technically right now you could meet with anyone throughout the state. Before CARES Act, this is another question, I applied for a standard SBA loan and was told no matching lenders found. What should I do to get a standard SBA loan? If there's no matching lenders found, what you did was apparently submit your request through the SBA's matching system. And that's not necessarily an infallible system. You know, SBA loans are available through most banks, and some nonprofit lenders are allowed to do SBA loans up to $250,000. And so it's really just searching around. And even if you were matched with an individual lender, you should always talk with 3, 4, 5, or 6 different lenders to find out, you know, who will provide the best rates and terms and stuff like that. So don't give up because the SBA system didn't tell you anyone was interested in you. Start with your local bank or wherever it is you have a banking relationship, and then, you know, always work with a small bank, a medium-sized bank, a big bank, and probably 2 or 3 others, and just sort of talk with them all. I mean, I keep quoting that former Governor Hickenlooper had to talk with more than 30 banks to find someone who was interested in working with him on his wine coop brewery project, and sometimes it just takes persistence. So don't. It's never handed to you on a plate. You actually have to go out and be a little persistent and check around. So. That would be my advice or recommendation. Very good, thank you. I'm going to go ahead and wrap up since we are a minute till. So today's slides and presentation can be downloaded at startupcolorado.org/COVID-19-resources. For more businesses resources, you can go to choosecolorado.com/COVID-19. And I'd also like to let you know that effective today, that website, choosecolorado.com/COVID-19, has added a list of over 50 alternative funding sources for businesses. And this list represents both statewide and regional resources. So that would be a great thing for you to check out if you're looking for an alternative funding source for your business. For small businesses and local SBDC center connections, you can go to our website at eastcoloradosbdc.com/disaster relief. And for resources related to entrepreneurs and entrepreneurial communities, go to startupcolorado.org. I'd like to thank all of our panelists today. And if you have topics that you're interested in hearing for next week's presentation, please reach out to us and we'll do our best to get those on the agenda for next week. The next call will be next Friday on the 17th at 3 p.m. right here, same place, same time. And please feel free to reach out to us on social, our website, or via email. We're here for you to support you, our small business owners, and, you know, stay healthy, and we'll see you next week.
Thank you, everyone.
Thank you very much.